Dear learners, welcome back to your educational channel Learn and Educate, where in this video we would be studying about the cost centers under the cost accounting, under which what is the classification of cost center based on the revenue. Based on the revenue, the classification of cost center is on profit center and investment center. Profit center. Profit center is a business unit or department which is responsible for generating the revenue and to control the cost, which ensures the profitability of the business unit or the department. The profit center are accountable for generating the revenue and expenses but are not responsible for making the investment decisions. The managers of the profit center are not having the powers for the making investment decisions, whereas in the case of investment center is a business unit which is responsible for generating the profits, for making the investment decisions which are related to assets, which are related to any expenditure which is capital in nature, that is a capital expenditure, and the allocation of the resources which is available to the organization. Why? For making a investment decision which suits the criteria of the department of the business unit. Therefore, the classification of the cost center in the cost accounting based on the revenue is profit center and investment center. The profit center, this center is not a cost center. Where is wherein the trading, wherein the few trading organizations, businesses, they trade profit center separately to trace the revenue and the cost. In the case of investment center, it is a center which is responsible for making investments, for making a particular investment, for choosing a criteria, for choosing an option from various available. Why? Depending upon the time, the risk involved, the nature of the business operations, the nature of the activity, and the timelines of payment, and within the time limit within which the money invested would be recovered, which means the working capital cycle, the cycle within which when 1 rupee is invested, within how many time it would be returned back in the form of sales. Therefore, an investment center is a center which is responsible for generating the adequate revenues on the investments by adequately utilizing its assets. The primary responsibility of the investment center is to earn the return on the investments, wherein the amount of capital invested on any particular asset or any capital expenditure for undertaking any particular project, any business activity, on which the primary responsibility of the investment center is to maximize the return on the investment. The difference between the investment center and the profit center is, and investment center is a department, a function, a segment which incurs cost and does not directly generate the revenue but is responsible for making that investment and how to get the opportunities maximum utilized. The investment center is responsible for tracking the cost and generating the revenue on the amount of the investment. It tracks the amount of revenue, it tracks the amount of investments. Investment center focus on increasing the efficiency. The primary purpose of the investment is to expand the businesses, is to expand its current level of activity, or buying a new plant or machinery. Therefore, it increases the efficiency of the organization. Whereas a profit center is a department or a unit that generates the revenue, it incurs cost and allow it to measure the profitability. Profit center measure the profits, generates revenue. Profit center is responsible for the profits and generating the revenue. Profit center focuses on revenue generation and the profit maximization. The examples of investment center are a particular division of a multinational company, an asset management, an asset management department, or an asset management company, the research and development cell of the organization. Whereas the example of profit center are a sales department, the retail branches, or in case the individual business units of a multinational company. When a company deals with in a diverse businesses, then each individual business unit will be treated as a particular profit center. The performance is measured in the case of investment center with respect to the amount invested, the capital amount invested, and the rate of return generated. The profit center performance is measured by comparing the revenue and the cost. Therefore, the profit center focus only on the profitability, that is revenue minus cost. The difference between the revenue and the income, it is the primary focus of the profit center. Whereas in the case of investment decision, it is related with the return on investments, ROI, maximizing the return of investment, the authority, the managers, the decision making authority with respect to have control over the revenue, the cost, the capital investments, and thus maximizing the return on investment. Whereas the primary authority of the profit center is to make decision which impact the revenue and the cost. Therefore, an investment center is concerned with the profitability plus the efficient use of the capital, which is to maximize the return on investment and the return on the assets. Whereas in the case of profit center, it is responsible for, it is accountable for the revenue, that is the income generated and the expenses incurred, but not for the investment decisions. Wherein the profit center is responsible for sales expenses but has no authority over purchasing equipments or expansion, whereas the investment center has the authority, has the control, has the real authority for making investments, for making decisions with respect to purchasing of assets, purchasing of the equipments, and allocation of the resources in terms of money, in terms of assets, in terms of the resources of the organization in the business, so that it can increase the efficiency, increase the operations, increase the business activity and expansion activities.